Wait. All right, I got to hit you up first on the James Hardie update today as our stock of the day. Full year net profit, $605 million. Record sales up 4%. But if we look at the fourth quarter compared to the same period last year, sales down 5%, income down 18%. Guidance for Q1 2024, the income range expected to be between 125, 165 million US. Margin range 28 to 30%. I think that has caught the eye of a lot of analysts. Share price up 8% today on the back of it. Scott, what do you think of James Hardie? Because there's been a question mark over US operations, hasn't there?
Yeah, mate, there really has. A combination of the economic circumstances over there and the general profitability of the business. It's not the first time we've seen very different economic circumstances for Australian businesses, both here and overseas. Look, honestly, the outlook is pretty good. And I think that the real question for investors is, where does James Hardie sit in the economic cycle right now? Because again, if you're looking at any share price and how much do I pay for this business, the answer is usually should be at least a question of how much the long-term earnings power of this company is worth. So put it out 3, 4, 5, 6 years and say, what's the company going to do, or what's it likely to do? How much am I paying for that? How likely is it to be accurate or volatile in the process? That's the real challenge. I mean, if you only look at Hardie's, I don't reckon they've had two straight, in the last 10 years, there's only been twice when they've had consecutive increases in profit year on year. Oh. It's been a really, really rocky ride. So 13 and 14 were positive at 15, so that was the first one. Down in 16, up in 17, down in 18, up in 19, up again in 20, that was the second one, and then down in 2021 and back up in 2022. That's the challenge, I think, with businesses like this, is trying to work out, where are we in the cycle? How much do you pay for that? I am a little bit loath, mate, to pay too much for Hardie's on that basis. I don't blame the market for being excited about the upgrade. That's a positive, or at least the higher than expected outlook. I don't know how sustainable the current level of earnings is, mate. So I'm a little bit concerned, I have to say. If you look at the company's current PE of 18 times, I would be a little bit higher now. But again, of course, future earnings hopefully higher as well. I don't want to pay 18 times for a cyclical business at or near the top of its powers.
Okay. All right. Ben, James Hardie, does it excite you?
Potentially. I mean, I think this stock kind of encapsulates the arm wrestle that's going on in the market at the moment, where every man and his dog has caught a recession and is wary of the stocks that are exposed to a downturn in the economy. And these stocks are actually, they're not shooting the lights out, but they're surprising investors in how well the business's earnings are holding up, and the guidance. Like, you're right, the margin guidance was the thing I think that really caught the market's attention. Yeah. They said a 25% EBIT margin in any volume circumstances. So
that's a pretty good margin, isn't it?
For a building business, they're normally pretty thin. So I agree. It's on 19 times forward earnings, but just to give you an idea, their guidance for the next quarter was 30% higher than the consensus analyst forecast had. That's a big difference. So I'll say a hold with a recommendation. I think it's a tricky one because I don't know the US market as well, but we all are looking at the net migration numbers that are forecast to come into Australia. We all see the issues that are happening in rent and housing markets. Like, there's going to need to be a lot of houses built, and I reckon the same's probably going to be true in America. I would say the net migration's going to surge back there as well. Yeah. So I
get really confused with the figure. New home building approvals down to a 10-year low. Came out last week. I was reading yesterday, 61,000 construction jobs going to go.
Wow.
In the next 2 years. It was forecast by the housing industry or something because of builders going broke.
Yeah.
And I keep thinking, we're heading for just a schmozzle here. I don't know what's going to happen.
1.7 million people forecast to come in nets to come to the country over the next 5 years, and we've already got a very tight housing market as it is. So, Albanese, he's continuing to pitch for this housing fund to build 1 million new houses in the next 5 years. But there's a lot of structural issues, it feels like, in the sector in terms of how you actually achieve that.
If you're going to have workers being laid off, how do you achieve that?
And builders need to make money ultimately, otherwise they won't do it. So, but if it does happen, that's a lot of new housing stock, and most of that will have James Hardie fibre cement board, being used.
And Boral and all of those. Okay, beneficiaries.
Reece?